At this point, we've recorded the initial measurement of our vehicle lease. But recall that in this lease, we also have variable payments based on an index or rate. These payments begin at $1,100 per month, but they adjust at the beginning of each new lease year based on changes in the CPI. Now, we haven't covered lease remeasurements yet, but for now, it's important to know that under ASC 842, a change in a variable payment that is based on an index or rate is not, by itself, a reason to remeasure the lease liability. Even though the payments we make to the lessor change, we leave the lease schedule exactly as it is. This creates a situation where the cash payment made to the lessor in a period does not match the payment reflected on the lease schedule. Now, because of the way we've approached our lease accounting, this situation is actually quite simple to handle. And we've seen it before in relation to non-lease components we combined with a lease component. But let's take a quick look at how this impacts our accounting records for a lease component. Recall that our approach to subsequent periodic lease accounting is to record the cash payment made to the lessor each period to a clearing account. The idea is that when we perform our ASC 842 accounting, we will reclassify amounts out of that account based on the lease schedule. In many situations, this process will result in a zero balance in the clearing account. We've seen this in prior episodes. This happens when the cash payment made to the lessor matches the lease payment reflected on the lease schedule. Put another way, if the lessor's invoice includes only amounts that are reflected in lease payments under ASC 842, there will be no variable lease cost remaining for the period. But recall that when calculating lease payments, paragraph 842.1036 states that lease payments do not include any of the following. And the first item listed is variable lease payments, other than those that depend on an index or rate. And as discussed earlier, when variable payments that depend on an index or rate change based on the lease contract, we do not remeasure the lease schedule. So when the cash payment to the lessor includes either variable payments not included in lease payments, or index or rate-based variable payments that have changed, the cash payment will not equal the lease payment reflected on the lease schedule. Now, I need to note here that there is limited guidance in ASC 842 2055-1 that addresses variable payments that depend on achieving a usage or performance target, which may require accrual before payment if achievement is considered probable. Those payments still do not affect the lease liability, and the mechanics are otherwise the same. We would simply accrue the amount to our clearing account rather than recording an invoice from the lessor. But just make a note of that if you have a lease that includes contingent variable lease payments. So how much impact do these variable lease payments have on our accounting mechanics? Well, not a lot. This is one reason we record our lessor payment to our ASC 842 clearing account. After our journal entry to record the periodic ASC 842 accounting, if we have anything left in that clearing account, we need to do some investigating. And one of the primary reasons this might happen is due to variable lease payments. And if that's the case, we'll simply reclassify from our clearing account to variable lease costs. So let's look at this using Precision Industrial as an example. Our vehicle lease includes payments that adjust at the end of each lease year based on changes in the CPI. Now let's assume we're in month 15 of the lease, and our base payment of $1,100 has been adjusted due to an increase in the CPI. You can see here the lessor has provided us an invoice that requires a $1,135 payment instead of $1,100. So let's walk through the full process of recording the lease for this month. We begin by recording the cash payment to our clearing account, just as we do for all lessor payments. So we'll create a journal entry. Let's assume we remit this payment on August 28th. and we will debit our ASC 842 clearing account and credit our checking account. And if we save and close, you can see we're reflecting that payment in our clearing account. Now back in our workbook, the reporting date is August 31st, 2027. So let's go make this journal entry in our accounting system as part of our month-end process. This will occur on August 31st, 2027. First, we'll credit our clearing account for $1,100, the amount of the lease payment reflected on the lease schedule. Then we'll debit our operating lease expense for $104.75. This represents the interest portion of our lease expense. Then we'll credit our current vehicle lease liability for $33.84. Debit our vehicle lease long-term liability for $1,029.09. Debit our operating lease expense again for $1,101.50, which represents the amortization of our right-of-use asset. And credit our vehicle right-of-use asset accumulated amortization for the same amount. So if we save and close, you can see that on our balance sheet we have $35 remaining in our clearing account. This is because the lease payment on our schedule was $1,100, and the cash payment made to the lessor was $1,135, since it's been adjusted up for the change in the CPI. So we as the accounting team need to make one more entry. This will also occur on August 31st, 2027. We'll credit our clearing account for the remaining $35 and debit our variable lease expense for the same amount. And if we save and close that, you'll see that our clearing account is now cleared. And if we look at our P&L, you'll see we have our straight line $1,206.25 in operating lease expense. Now this will increase when we record our other operating leases in this month, but for now this is the only one we've recorded in August 2027. And then we have the $35 in variable lease expense, just as we expect. And that's it for variable lease payments. The process may differ slightly at your company depending on the accounting mechanics you put in place on your team. But the important point is that the variable portion of any lease payment must be recorded to variable lease costs on our income statement, separate from our lease expense. This distinction matters because ASC 842 requires variable lease costs to be recorded and disclosed separately from lease cost. Before we look at disclosure though, we have one more very important topic to cover: lease remeasurements and modification. We'll begin to look at those in the next episode.